3, 2, 1, 0, and liftoff. Liftoff. Americans return to space as Discovery clears the tower.
Welcome back to TTMTrades. Today we're going to be talking about, we're going to go back and we're going to touch bases on the S&P 500 and its final breakdown. I said my personal view on SPY and why I think a downtrend is in place soon. This was yesterday. 250 to 255 is solid support, you know, and this was yesterday, and then finally today you had that nice breakdown out of this nice tight wedge that was forming. But yeah, let's just jump right into it, man. So let's talk about all right. So as I was telling everybody, man, you had these nice wild swings, a lot of volatility in the market due to, you know, just all the events and things that's going on in the world, and, you know, earnings reports and all these different items, right? And it looks like it's not a lot of confidence in the overall market right now. So, you know, you got these wild swings here. You was getting this nice wild symmetrical triangle forming here, and then the swings begin getting a little tighter and tighter. So that's why you have these yellow lines tracing in the swings, creating a tighter symmetrical triangle. And then I just kind of, you know, gave my opinion on why I thought this is going to break out of this symmetrical triangle into this downtrend and not actually hold within this triangle itself. So the biggest thing was, as I had pointed out, was if you look here, your RSI was unable to, number one, break above that 10-period moving average, you know, like I always tell you. So that shows there's no momentum within this stock for it to start an uptrend. And then, as I pointed out earlier, the CCI was getting rejected and even broke below the 30-period moving average itself. So all these different signs are pointing to this going into a downtrend and possibly retesting these lows of the bottom half of the symmetrical triangle, as you can see here, of 251, 254, and then possibly a touch of 257 before you probably get another bounce play to head back up, and this time either create a higher high and or create another a lower high going back up, and then another pullback to break through. So just looking at this overall, ticker TVIX is the play, which is the volatility, one of the volatility indexes that represent the S&P 500. So I highly doubt that you'll see this one recover at all. Now, one thing I will pay attention to, there was this large spike in volume. So possibly tomorrow you can get another retest of the price action, possibly pulling back up into this wedge and trying to maintain within it. But if it doesn't happen on high volume, then that could be a head fake and possibly a bull trap as far as the S&P 500 goes, before it finally just drops all together and goes back down to retest these lows down here at 257 again. So I will continue to keep an eye on this one. Now remember, like I tell everyone that follows me, anytime a stock or ETF or whatever is in a strong downtrend, it will have issues crossing above that 50 and 60 buffer zone on the RSI. So as you can see here, looking at the RSI, I'm trying to get this lined up with 60. There we go, perfectly. As you can see here, it was holding above that 50 to 40 buffer zone. Anytime a stock is in a strong uptrend, it'll hold above that 50 to 40 zone. So just to give you an idea of what I'm talking about, let's duplicate this and let's zoom out to about a year. Matter of fact, let's do 2 years. Let's go out 2 years. So as you can see, the S&P was in a very, that's too small. Let's just do a year. This past year has been very bullish. So as you can see, in this past year alone, the S&P 500 itself has been in a very bullish trend. So anytime a stock, ETF, or whatever is in a strong bullish trend, the RSI itself will stay above that 50 and 40 buffer zone. It will use it as support. So as I bring this down to 40, as you see here on each and every pullback on the S&P or the SPY or whatever, as it pulls back, it finds support in that 40 to 50 buffer zone, and then continues to run up to continuously show that even though there's slight pullbacks, that it's still in a bullish overall trend. And as it continues to pull back, it stays within that 40 to 50 buffer zone. Now, as you see here in February 2018, recently, it dropped below that 50 in that 40 to show the weakness in the bears. And then as it has been trying to pull back up, you can see here as we zoom in, now it's the reverse. The rejection points for a bearish overall trend would be the 40 to 60. So as you can see, as it tries to pull back up and it gets within that 50 to 60 buffer zone, it gets rejected again, tries to run up again, rejected, tries to run up again, it gets within that buffer zone or that area, and again it's getting rejected and it's beginning to pull back. So until you get a solid break out of that 50 to 60 buffer zone to show that the overall momentum is switching back into the bull's favor as far as the S&P 500 and trying to recover as far as the overall market, then the S&P 500 overall looks like it's in a bearish downtrend, and it's just trying to hold this symmetrical triangle pattern. So like I said, it has immediately already failed its immediate symmetrical triangle pattern, which it was getting tighter and tighter. What we want to see is this 257 hold. If this 257 breaks, which also correlates to the 200 period moving average, if I was to bring it up, then you would probably go on a nasty downtrend, which in turn TVIX would be the play. All right, and that's it for the S&P and TVIX. Now, what I am watching as of now, with the market being so choppy, I've kind of been staying out of stocks for the most part, unless I see a stock is on a very, very strong established uptrend already, with volume behind each move, then I'll jump in. But as of now, I've been playing the volatility index and ETFs. So one ETF I would start watching is DRIP, which is the 3 times bear S&P oil and gas exploration ETF. It is the direct opposite of the overall XOP, which is the S&P oil and gas exploration and production ETF. All right, so DRIP does the opposite of what XOP does. So if we go to a peer chart analysis, as you can see, the XOP has pushed up into this nice, let's zoom out, let's go out a year. So as you can see, it's pushed up into this known area of resistance right here, where it has been rejected on this past previous push up right here in that $39 to $40 area. So you had this nice run up into that $39 to $40 area, and then it went on this nice went on this downtrend right here, as you can see, and then it began to trend back up slowly but surely, and then it had the breakout again, and then it's, as you can see now, is right back in this area of 39 to 40, and as you can see, there's the price action is beginning to get rejected in that area again. Now, if we know the price action is getting rejected and it's at a known resistance point, then it would be safe to say that this one is possibly going to begin to pull back. If you pay attention and look at your oscillators, such as the RSI, you can already see that it is beginning to trend downward out of that kind of oversold area that it reached. It has already crossed below that 10, then it had already crossed, it's beginning to cross below that 30 period moving average. But as you can see right here, the entire time on this build up, as it looks like a symmetrical triangle was forming, and then finally the breakout here, it held above that 10 and 30 period moving average nicely. Okay, but now you can see it's beginning to pull back right here in this area. So with that being said, the XOP is going to pull back, and the RSI has already shown you that it's losing momentum within this top area, and then even the volume in this area is beginning to drop down. So these are all pre-warnings. You're losing momentum, the volume is decreasing, so these are all warnings that this area of resistance that ticker XOP is about to pull back. All right, now what is known that ticker XOP is about to pull back, then we want to look at its inverse, which is DRIP. Now looking at DRIP, which is its inverse, is currently sitting at 803. All right, and just like the S&P oil and gas exploration ETF, well, not ETF because it's an actual market itself that tracks those companies, as it was hitting a known area of resistance at the top, you can see DRIP, which is the inverse, beginning to consolidate down here in this 8 to give or take a $9 range, as you can see here. So let's zoom out on this chart also. Let's go out a year. So you can see DRIP is beginning to consolidate in this $8 to $9 range right here in this nice channel. So there's a potential chance here for profit as XOP itself begins to pull back because it's hitting a known area of resistance. Then since DRIP is the inverse, it should begin to trend up. Now potential profit targets, as you can see here, would be this, definitely this $12 area right here where there was some nice support at, then it fell below, and then it ran back up, and then it found support in this area before finally fell and then running all the way down to $8. So there's a potential profit here from anywhere from $8 to $11 and or $12, so about a $3 to $4 spread for a possible 40 to 50% gain if you play this one just right. Now let's zoom back in. We're going to pull up my moving averages. So from a swing trader perspective, I had the 10, 30, 50, and 200 period moving average. So as you can see, the large spikes in volume shows that there is some accumulation happening in this price range, and buyers are beginning to come in and buy in this general area because, for one, XOP is at a known area of resistance and is beginning to pull back. And if we know ticker XOP is going to pull back, then we know DRIP, which is the inverse, is going to go in the uptrend. So one thing to pay attention to is, one, your RSI is beginning to create higher highs and higher lows, and it's trending above its 10 period moving average, and now it's trying to make that break above its 30 period moving average. As you can see here, the entire time into the downtrend, it was trending below its 10 and 30 period moving average, showing that the momentum was in the bear's favor, and then finally you had this failure altogether to where it dropped down into that $8 to $9 range. So seeing that your RSI is signaling that momentum is beginning to shift into the bear's favor, and then your CCI is beginning to reverse and trend back up on a nice steady pace above its 10, and now has broken above its 30 period moving average, along with your slow stow beginning to trend back up and break above its averages, then this is showing that the bulls are coming in and are taking control of DRIP. And though a lot of people are switching out of XOP and starting to put their money into DRIP. Now also looking at this, seeing that the RSI is trending up, your CCI and your slow stow, you can also notice here that on this downtrend, it was unable to stay above its 10 period moving average, which is this green line right here. Now you finally got a nice clean break above the 10 period moving average on above average volume, which today's volume was 4.79 million, with the average volume being 3.79. So DRIP definitely looks like a great play here. Another moving average to pay attention to is that 30 period moving average right here, sitting at 10.53. So you could possibly get that first run from, if you can get in the mid 8s, I'm almost sure this won't dip back down to $8, but if you can get down in that $8 range, it's up to you however you decide to play it, but you can get a spread from down here in this consolidation pattern area up to that 10, and or push up into that $11 to $12 where that first line of resistance is at. So I would definitely keep drip on my radar, but as of right now, I'm currently just playing the volatility indexes as far as the markets being choppy, and I'm focusing on ETFs, XOP, and ETF drip. Now keep in mind, the ETF that is the opposite of drip is Gush, which is the bullish one. So anytime XOP goes up, which is the overall, let me find it, there we go. As you can see here, anytime XOP goes up, Gush follows it. All right, and then drip does the exact opposite because it's the inverse. So again, if you look at Gush along with XOP, they're both pushing into this known area of resistance, with the momentum beginning to taper off and the volume beginning to taper off. So we should see a nice pullback here sometime soon, which makes drip a fair play going into next week. So TTMTrades, again, if you learned something, subscribe to the YouTube channel, leave a comment. If you got a Stock Twitch channel, hit me up on Stock Twitch, hit that follow button. And if you got questions, ask. Definitely ask. If I'm not out to sea and or I'm not busy, I would definitely respond to your question. All right, but till next time, TTMTrades, I'm out.
Houston, Tranquility Base here. The Eagle has landed.